Welcome back to the Cobra Trading Channel, everyone, where we focus on people, passion, and platforms. I'm Alex Bustos, and today we're going to be focusing on how to avoid overtrading. So what is overtrading? Overtrading comes down to placing too many trades. But some traders may trade 50 trades every day, and that might be a normal day. Whereas some traders are very selective and only trade one trade a day, and that is it. And then you have the other traders who are in between or even more. So how do you really determine, are you overtrading? You first off need to know what is normal trading for you. What is the condition that you trade well in, and what is the outcome? Are you placing one trade, two trades, 10? Also, is it a busy market? If it's a busy market, maybe you're placing more trades because of that. So you don't just want to judge it off of one thing only of overtrading means you're trading way more, but you also want to ask yourself the question of, am I losing control of my emotions? Emotions are so important because if you get emotional in a trade, whether you're greedy, whether you're scared, whether you're excited, whether you had multiple wins in a row and you're like, I don't want to give anything back, or I want to make more, I want to push. Whatever those feelings are, those can tend to make you make decisions that you may not otherwise make. And those decisions can force you to place trades more frequently. You got to compare the two. You got to ask yourself, am I placing an abnormal amount of trades? And are my emotions, erratic, or they are very extreme? Because if they are, those two combined can be a recipe for overtrading. Some of the reasons you want to avoid overtrading is the fact that you're going to be missing out on opportunities, the opportunity cost, right? A lot of people may be like, I'm tagging this trade, I'm tagging this one, I'm getting in this one. But they might miss the golden opportunity because they're overtrading all these mediocre setups, and that overtrading mentality can make you really miss the home run. And so that's a huge opportunity cost, right? Instead of placing 10 trades that make you a small return, maybe 1% each, you can place one trade that maybe make you 10, 20%. The other thing that overtrading can cause is it can cause you to be revengeful. You could really snowball losses. And what happens is you could snowball losses, and snowballing doesn't just stop on that day. Sometimes that snowball can get so big that it rolls into the next day, into the next days, to the next week, maybe even months. So you really need to take control and understand that overtrading is something you need to be aware of. You got to ask yourself, am I getting too emotional? Am I making decisions off of my emotions? And how many trades am I taking? Am I being excessive? And keep in mind, excessive for one trader can be completely different for another. You got to know what your benchmark is, right, on a good day. To avoid overtrading, you need to first recognize it. That's why we really spend some time and talk about the beginning, how it makes you feel, what is the cause of it, what does it look like? Because if you can recognize it, then you can take the next steps to hopefully avoid it from really hurting you and your account. The other thing you want to do is you want to define your trading criteria. You need to make sure it's very, very, very well defined, because if you do not, it can easily become, that was a good trade, that's not overtrading, that was an okay trade. But if you have a strict criteria, you'll know right away, hey, I'm overtrading right now. That wasn't really my setup because it's missing part A of the part A, B, and C, right? It might be missing one step out of the 10-step process that I need to place a trade. That's how you're going to be able to identify, are you overtrading, and how you can avoid it is by making sure that you recognize it, and then you look at your criteria and say, if it doesn't fit these criterias, I need to avoid it. Another thing is you need to make sure that you let the trades come to you, because if you let them come to you, you're going to be a much more patient trader, and you're gonna be more calm. Because what's the first thing we talked about? If you have a lot of emotions, you're excited, you're eager, you're scared, your heart's pounding, that can lead to overtrading. So if you sit back, you have your criteria, maybe you have a list, and you just look at stocks and you're like, that's not really for me, and then you wait for it, it can really help you avoid overtrading. And this is so important when it comes to extremes. What do I mean by that? When it's super slow or super busy. If it's super slow, you may be forcing trades like, I'm bored, I'm just gonna look for things. You don't want to be looking for trades. You want to just wait for them to come to you. Sure, you're browsing the market, but you're not browsing it with greedy eyes. You're browsing it just to browse, and if something stands out because it hits your criteria, then you place a trade. On the opposite end, when it's super busy, you need to slow down even more and really let them come to you, because when the market's really busy, right, it's just going and going, you're gonna be excited and you're gonna wanna not miss out. You're like, oh no, I don't wanna miss. But if you sit back, get your list of criteria and wait, they will come to you and it will help you avoid overtrading. You also wanna make sure that you're aware of your emotions before the market opens. Because if you just had a bad morning, that's really gonna affect you. You may be anxious. Maybe you just got in an argument with your spouse, a friend. Maybe you just got upset because you went to go get a Starbucks coffee and they gave you the wrong coffee. They put regular milk instead of almond milk. Like, you might be upset. And those emotions, you need to recognize those, because a lot of people may just be recognizing their emotions while they're trading. But before you start trading, your emotions matter. You want to keep them in check and you want to recognize them and write them down sometimes. Because if you write them down, you really acknowledge how you feel. And that can be a little stoplight to let you know, hey, you might want to be a little bit more cautious today. You might want to get your criteria list and sit back more and let them come to you even more, because you know that the emotion you had in the morning before the market opened can really affect you. There's also the idea that cash is a position. And so many people tend to think when they're in a cash position, meaning they're not taking advantage of any stock, they're in no market at all, that they're like, I'm not doing anything. I'm not making money, right? I'm not making anything happen. But in trading, cash is a choice. You actively decide, hey, none of these stocks fit my criteria right now, so you don't deserve my money because I worked hard for it. So therefore, I'm gonna take the position of cash. You should start thinking that way, that, you know what, I'm gonna take the cash position. So that way you're more at ease. So you're not eager to jump into anything. Because if nothing fits your criteria and you don't have that mindset of cash as a position, then you may just be like, I need my money doing something, so let me go in this one. And on top of that, you need to have some type of rule, whatever it is for you, that's gonna help you get away from the computer. Because maybe you know these signs, right? Emotions, how you feel before, how you feel during, how many trades are you taking, right? You have your criteria as all the trades you're taking outside your criteria, but you still need something to be like, hey, you're going too far in the deep end. I need to bring you back. You need like a lifeguard. You need something. You need to make a rule. Whether that's, if I lose 10 trades in a row, I'm out for the day, whether that's a dollar amount, whether that's a certain time, because you know your stats and you know after 10 a.m., 12 p.m., whatever time it is, you typically don't do well. You have some type of rule to pull you away because you want to protect your capital. And if you don't do that, you can really steamroll over your own self because of overtrading. Now that you know how to recognize overtrading and how to avoid it, hopefully you can continue to strive and eventually thrive in your trading. And if you have any questions when it comes to trading or anything at all, feel free to reach out to us at cobratrading.com, and be sure to like and subscribe the channel. Thanks.